Ever wondered if maybe, just maybe, the standard economic news uh, misses something big?
Yeah, like a key piece of the puzzle.
Exactly. Today we're doing a deep dive into Peter D. Schiff's The Little Book of Bull Moves in Bear Markets. It's basically a guide, maybe, on how to keep your investments looking okay, even when the whole market seems to be tanking.
Right, it came out in 2008. And Schiff, well, people sometimes call him Dr. Doom, because he made some pretty accurate, maybe prescient predictions about the economy back then. He's not just suggesting small changes here. He argues for a complete U-turn in strategy. It builds on his earlier book, Crash Proof. We're going to dig into his advice, which, is controversial, definitely, but also really compelling. He talks about how to handle what he saw as these big economic downturns coming.
Okay, so let's get into it. What's his main take on the American economy?
Well, he doesn't paint a rosy picture. He basically calls it a house of cards.
A house of cards.
Yeah, built on debt-financed consumption. That's his phrase. He points out that something like 70% of GDP,
The total value of everything produced.
right, 70% of that comes from people buying stuff, often imported stuff, and often using borrowed money. And for Schiff, that's not real growth. He actually calls it wealth destruction.
Wow, wealth destruction. That's pretty strong, especially since we always hear consumer spending is good for the economy.
Exactly. And what's really interesting, maybe a bit concerning, is how he just dismisses the official numbers. He really believes the government fiddles with statistics like the CPI, the inflation measure.
Fiddles how?
He argues real inflation is way higher, maybe 8 to 10% a year, not the 4% or whatever they report. And he thinks the GDP figures are bogus, too inflated by things that don't actually represent real economic health, like spending after disasters.
So the question he raises then is, if the basic numbers we use are flawed, how can anyone make smart money decisions?
Precisely. It makes you wonder.
Okay, so if the economy is a house of cards and the stats are dodgy, what's his advice? What should you actually do with your money, according to Schiff?
Well, his advice is pretty radical. He basically says, get out of U.S. dollars.
Get out of dollars and cash, bonds too.
Yeah, cash, bonds. He thinks the dollar is headed for a collapse, a swan dive, as he puts it. His big recommendation is shift your investments away from what he calls financial paper.
Stocks, bonds, that kind of thing.
Mostly, yeah. And move towards tangible stuff, real assets.
Tangible stuff, like commodities.
Exactly. He saw back then a huge historic secular bull market coming for commodities.
Yeah.
Gold, silver, sure, but also oil, base metals, agricultural products. He figured there was this massive, insatiable demand growing globally, especially from places like China and India that were industrializing fast.
Okay, commodities. What about stocks? Does he say avoid them completely?
Not entirely, but he's very specific. He favors conservative foreign stocks, ones that pay good dividends, and he points to resource-rich, developed countries. Think Australia, Norway, maybe, or even producing nations like Singapore.
Why foreign stocks specifically?
He sees potential for their currencies to go up against the dollar. And maybe counterintuitively, he thought there was less political risk there compared to the U.S. at the time. He was really looking outside the U.S. for stability.
So it's not just about changing your investments. Schiff's view leads to some pretty stark ideas about, well, everyday life too, doesn't it?
Oh, absolutely. He predicted a decade of frugality for people in the U.S. He literally uses the phrase Great Depression with rising prices. It's a chilling image.
A Great Depression with rising prices? That sounds awful.
Yeah.
So it requires a massive change in how we live and handle money.
Totally. He pushes for serious saving, like setting up automatic deductions, selling stuff you don't need, really tightening the belt, and critically, getting rid of debt immediately, especially variable rate debt, credit cards, adjustable rate mortgages, things where the interest can suddenly jump.
That makes sense if you expect hard times. What about jobs? Careers?
Yeah, that's another big one. He advises shifting away from service sectors. He saw declining finance, retail, even healthcare in some forms.
And moving towards?
Towards industries involved in sort of rebuilding. Think agriculture, energy production, repair services, even tailoring, making things last. He even goes so far as to suggest people should seriously consider moving abroad, emigrating to faster-growing economies for better job prospects. That's a huge step.
Wow. Okay, so this deep dive into Schiff's book, it really paints a stark picture, doesn't it? It challenges a lot of what we might think is stable about our finances and careers.
It absolutely does. And it leaves you, the listener, with a pretty pointed question, I think. Are you really prepared if things change dramatically in the way Schiff described? What steps, if any, might you think about taking to adjust your own financial life or even your career path for these kinds of big global shifts he foresaw?